following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. 8 a.m. This is, well, it's a little after. It's 8:06 a.m. Eastern Time, so this will be recorded and played at 12:08 this afternoon. Meantime, back at the ranch, I'll be doing this for the rest of the week if I can. 8 o'clock to 8:30, then you get tossed over to Jason. Jason takes you through to 9 o'clock, and Larry comes on. So let's do this. The Dow right now in the daily chart has gone extended higher, and it's in a leg F in the Chapman wave, which says, oh, watch out, you got to be real careful, or an alternate wave A. Well, A is very positive. It says, any pullback, you've just got to buy. My inclination right now is to be a little cautious and say there's a greater chance at this point, I'm thinking, that it's a leg F. And I'll go through this as we move along. 25,790 was the Dow high, and the 120-minute chart made a peak C. There should be a D. There could even be a peak C1, C2, double top, not making a new high above 25,790 and pulling back. I'm thinking there's a good chance today that by the end of the day, we start a pullback. I'm totally wrong if the Dow starts to trade and hold 25,800 later on today. That's a, you know what? Probably leg A, and we will continue rallying all the way into next week. So I'd say there's an important phase right now, and I'll explain the difference between just a short-term phase and an intermediate-term phase. Short-term would say that if you're looking at the 120-minute chart, the MACD is still strong. The stochastics at 96%. So it would take a pullback under 25,676, the 9-period exponential moving average, and then a close under 25,611 to even get the stochastic to pull back to about 88%, and the MACD to turn down. So it's a series of pullbacks. So it's not going to just be one event unless it's a really sharp, sudden, bad news event. So I'm looking at this and saying, okay, there's enough strength that we could go high. Be prepared for that. Now let's go to some other aspects. If you're looking at the E-mini futures, well, first let's do the Dow futures because I've got them right here. You can see that this dashed line, the green line and the red line, what I call the Chapman wave inside track repellent zone. That's where prices get pulled back. And remember, yesterday I was talking about eight bars from that P, D to E. It was 8 bars from that E to whatever this leg is right here. And if we went above that, that would extend it. Well, now we've extended it. So the measured move, an equidistant move in time, or not necessarily in pattern, but in time, says that we've now gone beyond that. That is a positive. Got to expect that. The MACD just crossing positive here, and the stochastic in the daily at 87% is a good sign. The YM is the futures, and its leg E in the weekly chart having gone a tad. Let's see. The high was 25,857 in the futures. We've gone to 25,825. Almost taken out that high of, that was March, the week of the March the 2nd? Yeah, March the 2nd. Now, if you're looking at the cash position, look at this. You've got the resistance right there in this repellent zone. We're at it right now. You've got the weekly chart in this rectangle formation that's gone to the left side high of the rectangle. In the S&P, it's gone even higher, which means that it's tackling the high of January the 26th. The weekly chart, let me just expand this a little bit. You can see the cup shape. So far, that's looking positive. Now, if I go to the S&P, at this point, the futures are up enough, up 450. The S&P cash, 2862.44 was the previous high. And the high yesterday was 2859.76. So I'm watching that left side high from the 7th of August. And the weekly chart has had a very nice run in this rectangle formation, going towards the 2872s. All-time high weekly chart is very good in the cup-shaped pattern. So here we go, the Qs. QQQ trading at 180 0.23 right now, 53 cents pre-market. At once, this is very interesting because the 182.93 high of the 23rd of July came plunging down towards the 174 level. Then it rallied back to 182.63, pulled back, and now it's in this kind of, if you look at the rectangle of the 120-minute chart, it's just stuck in this rectangle. So if the Qs, which led the market up for years, is starting to have a little bit of weakness, followed by it's led by the semiconductors, the SMHs, which are really weak. I've been talking about this for some time, the sell mode that's unfolding in their semis. This is saying to me that there's now a bit of a mixed market, and that tells me that the Dow 30 alone cannot lead markets. The generals can't lead without the soldiers. That's just the way it works. Not for long. But in the meantime, we've got this oval pattern in the monthly chart of the SMHs. So the SMHs action right now says they must hold 99 over the next week. Close below that's very negative. A bounce to the 105 level will say, hey, we can go sideways for a little longer. Now let's go to gold. Why is gold important here? Because gold is up about $4. This is just horrible action when you think of what it's done over the last many weeks, months actually. To have three candles that were green, well, we don't know about today. So far it's green. And to only go up to 1205, was it even 1205? No, 1203.1. Couldn't even get above the 14-period moving average. It says, and I'm convinced of this, that the dollar strength that I've been talking about, we've been long the dollar since April the 6th at 90. This I can now put, I'm very close to putting a down arrow to say that the daily is in a sell mode, but the weekly is still very strong, even though it's got the Chapman wave stork leg formation. Here's the leg, here's the body, here's the neck, and we might be starting the beak formation. And that says that if there is a close below the low of the oval 93.71 low of the 13th of July, that's really important. I think that, in fact, what we're going to do is we're going to start finding some support between the weekly 9 period, the green line there, 95.10s, and 95.60s is the 14-period moving average. And that would say that gold might have a limited upside. And I was thinking of, for subscribers, Friday and then again Monday, that we would go long. I'll send out my newsletter as soon as I'm done with the show at 8:30, which will be 8:30 a.m., and I'll finish it up. I didn't want to rush through just to get it out. I'll be a little late, but it'll be there. And I'll make a decision whether or not we're going to do any trading in gold. The gold stocks, I mean, I use ASA. It's just a stock I've used for years. And look at this, that candle, that gap down candle of the 15th of August. I mean, we're not even a third. We're about, a third of the way into that candle. I mean, this is not good action. So it has to be a V-shaped pattern with gold moving up $20, then up another 15, and then another 18, establishing a decent base so they can have 2, 3, 4 weeks of rallying rather than just another pop-up and failure. So I'm watching it. I do think gold has a chance to have this counter-trend rally, but it's how strong and what does it do and which stocks does it take up with it? We've got a break coming up. I'll be back. Basil Chapman, the futures are up 53 in the Dow. The futures are up 4.50 in the E-mini. I'll be right back, and we'll talk more about the TLT. Talk about copper and gold. Copper and, gold.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman. We're back, and this is the early morning show that's going to be recorded and played again at noon. So at noon, if the Dow is up 40 to 50 points, that's good, but it's got to hold through the afternoon. My thinking is that there's going to be some weakness that comes in today, and that there's a chance that we actually close down on the day. Can you imagine if we're up another 110 or something? No, I think that we're bumping into resistance. How the market handles the resistance is going to be very important. Crude oil is up 26 cents, nothing to see here. And if you look at the TLT, this is going to be kind of important over the coming, where did that go? TLT. Over the coming, leg D in the daily chart, but it's pulled back pre-market 0.44 at 121.35. 121.22 is the 200 period exponential moving average, and you can see how it's bounced over and under and over and under. So I suspect, and I'll continue to say that at least for now, I think that yields are just in a trading band, nothing to see here until there's a much more significant move, and that'll be if the TLT starts to trade at 122.80 to 123.30, something else is happening. And that means that yields are going to be pulling back and going to the lower end. If the TLT starts to break down and you see that TLT trading at 119.30 or lower, those yields are going to move towards the upper range of the band. Just keep it in mind that we're in a trading band, and trading band, a rectangle formation can last a lot longer than your patience. So I wanted to show you the IWM. Why? Because the IWM was stuck in this downtrend, this down channel. It's called the Chapman Wave Inside Track Repellent Zone. And if we can break sharply above into the 169.50 area, and then in that same leg push into the 170s, that's going to say that for the first time in a while, that trading band in the IWM, the Russell 2000 at 170.20, that resistance, the all-time high, is about to be pierced. If that's pierced, all of a sudden you've got the Dow being joined by the Russell 2000, the small caps, and now you've got some semblance of direction because you've got, yes, generals with the troops. You need that. And the S&P will probably follow. I don't see the S&P right now leading. So this I'm calling leg E for now in the daily chart, 120-minute chart. MACD is good. Is it A, B, C? Oh, it's gone to a D already. So it's ready for some kind of pullback maybe later today. We'll watch this one closely. Why? Because this is the one that's saying to me, it's had a very long, what do you think, about an 8 to 9 week consolidation. Oh, I didn't know that I had anyone online. I guess John was online wanting to know about the SPY. So let's, yep, we've got time. Let's do that. So I'm looking at this and I'm saying the IWM is very important right now. The SPY, which is the trading vehicle, the S&P depository receipts for the S&P trades with the S&P cash, SPX 500, is trading up 653 pre-market at 286.20. 286.01 was the previous high. If this goes to a higher high, I'm going to call this G/C, and together with a couple of stocks that I consider to be really important, I'm going to include Apple and a couple of others. I'm looking at this and I'm saying, you know what? The SPY can go a tad higher. 286.63 was the all-time high. It could, in fact, tackle that all-time high, and a very quick leg D, peak D, leg E, peak E, to another high says, gee, you got to watch that closely because could have an explosive Chapman wave instant restart spiraling to the upside. I'm looking at this and I'm saying, you know, I think the daily chart is saying I'm getting a little tired. I'm rallying, but I'm not able to hold the rallies, and that to me is really important. So make it real clear. The weekly chart is acting very well. The MACD is good, stochastics at 92%. The on-balance volume is good. The relative strength is rallying. So far, this is good action. I'm not going to presuppose anything. I'm just giving you the doji candle of yesterday says that if there is a pullback, and in print, not just pre-market, but in print, if it doesn't go above 285.97, looks like it will, but I'm just saying if it doesn't, and then it closes below yesterday's low of 285.06, there's a chance that you're going to be pulling back here, and then MACD will deflect lower. That'll be a negative, and the stochastics at 69%. It's not looking great. It is rallying, but it really isn't supporting everything. So this is going to be a couple of days of very important action. I'm just saying a 1.5 point move to the upside, a 1.5 point close from the 285.67 close of yesterday, a 1.5 higher. I have to consider that that all-time high is being tackled, and you could go a little bit above that before you have a digestive phase. But if there's a pullback immediately from here, a 1.5, I'm saying we could have made at least a shorter-term top, but there's a lot of support in the 280, 250 to 280 level. So I'm looking at this. So I hope that helps, John, calling about the SPY. What's really important, if this time next week, today's Tuesday, no, if Friday, a week from Friday, just before the Labor Day weekend, if the SPY has touched 288, I have to consider that we look at the Labor Day weekend as a really significant time event. And if that's the case, if it's closed there, this is really good action. Now, any pullback has to be monitored as a general market overview. So before we run out of time, a couple of things I want to do. If you're looking at an Amazon, AMZN, Amazon struggled. It hasn't gone above the 1925 round number high. Pre-market is at 1881, holding the 14-period moving average, but struggling with the 9-period moving average. I'm watching Amazon. I think it's a clue. Apple, spectacular stock. And of course, it looks to me like for the last 9 years, if you just bought anything that Buffett had owned, the majority of the stocks have been spectacular. And Apple is trading at 216.43 pre-market, leg D in the daily, good technicals, leg E in the weekly, good technicals, leg D in the monthly, good technicals. It would be a short-term pullback, and that pullback says that in the 215s, if there is a close in the next 3 to 5 sessions below 211, you've got 208 is really important support, and then I think Apple finally has a bit of a consolidation. But in the meantime, it's been a leader, it's staying a leader. Amazon. Home Depot. Home Depot is really important. Why? Because it's had a nice spike off the low under the 191 area, trading at 197. It's actually a 198 round number at this point pre-market. It needs Home Depot, because it's part of my cash index, needs to power above 199.74. If it does that, I think it's telling us, be careful This is not a shorting market. This is really a buying market. I think that we've got parameters that we can watch that are pretty clear. If you look at the HGX, which is the home builders, HGX, rates this low, still very low, even though they've bounced, says, you know what, the HGX needs at 302, it needs very much to get to the 306 to 307 level in the next week and a half, 2 weeks, without breaking 295, absolutely key support. I'm watching this because look at that weekly chart. Nothing there. It just makes lower lows and lower highs. No strength whatsoever. Even when the technicals turned up, it failed to hold. So home, Philadelphia housing sector index, very important to watch. So what did I say? 1.5 points closing in the SPY from where it was yesterday's close is very positive. 1.5 pullback says be careful. We're looking at the IWM in relation to the Dow. Do they pull back here? Very important session coming up. Have a great day. Check out my opening call, my daily newsletter. Stay tuned. You've got Jason coming up. This is the kickoff to the market. And otherwise, you'll be listening at 12 to 12:30 this afternoon. I'll be back tomorrow, same time. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.